Everybody, welcome back to another video where we are going to go over what to do when the stock market bleeds and sells off. We're going to talk about what's been going on past couple of days with Qs and SPY, just general market, some of the bigger name stocks that get traded all the time, and what we plan on doing and how we plan on reacting. And should you panic? Should you be selling and running for the hills and hiding, or is this a perfect time to be buying? And so that's what we're going to be talking about today. So let's start off with the Qs here. Oh, by the way, if you haven't already, hit that subscribe button, hit the like button, follow along so you can catch all the future videos that we're going to be doing. All right. Back to the Qs here. So one of the last videos that we did talking about just the overall market last week with Qs and SPY, we pointed out that this falling wedge here, we'll highlight it in a different color just so you can see it, these white lines, this falling wedge trend line. At the time when we made our video, we were sitting right here talking about how it's very likely to bounce off of these EMA support lines, run it back up after we got that hammer candle last week. And it did exactly that. It ran up, hit that top of that trend line, and then we had a giant sell-off yesterday. Everybody was panicking, saying that the crash and the market correction is here and should be selling, and all these corrections and major stock market crashes coming. But is that really going to happen? Let's take a closer look at what actually is going on here. So yes, this giant sell-off candle is not a great candle that we want to see. It occurred right here at the trend line, where we often see acting as a point of either resistance or support. We've talked about this in our other videos, how these trend lines help us identify what a stock is going to be doing and kind of the range that the price is going to fluctuate up and down within. So it's very common to see this price reject. Now, the big sell-off and huge candle isn't ideal, but we are still holding over these support EMAs. And again, these lines here, this purple, blue, light blue, orange, and other blue line here. Maybe I should pick different blues. But these lines are moving averages of the price of the stock, and they also act as a kind of rough support or resistance. You can see just over time how the price follows these lines, and when it touches certain levels, the price often bounces. You can see it came down here and bounced, came down here and touched these and bounced up. Here it's touching again and bounced. So these lines are often used as good support. And that's exactly what happened after that big sell-off. And again, today we had another kind of big sell-off. But buyers have been stepping in, and we got another interesting candle close today before a day off. But the more interesting thing that I want to point out that we can see forming here is we're going to get our drawing tool, and we've got an interesting, so there's a shoulder, there's a head, and then another shoulder. We could be looking at an inverse head and shoulder pattern here. And what that means, a typical head and shoulders where we would see the top of the price and then two equal or almost equal lower candle prices. This is a very common structure and pattern that you can see in a stock chart. You can look it up, but just look up head and shoulders or inverse head and shoulders if this is not a pattern that you are familiar with. But to save us some time without going into depth on exactly what these patterns mean, to kind of just give a quick summary, this is a bullish pattern. It is a good thing that we like to see forming in a chart, because it's often a sign that bulls or buyers have stepped in when the price reaches a certain level, it acts as a huge support, and price typically bounces off of it. The other interesting thing about these head and shoulders or inverse head and shoulders patterns is the necklines or trend lines that form above them or below them often help us figure out how big of a price move might be coming if this ends up playing out in our direction. So what we would want to see over the next several trading days is for the price to either consolidate around here for another day or two, or to immediately reverse, come back up to this trend line, and potentially break through it this time and close over the trend line. And if we see that, there is a high likelihood that we chase all-time highs again up to this 538 level. But we need to see a daily close over this white trend line and not have it reject again. But for now, I am still heavy in lots of positions and swings, mostly in the tech field here. But this is looking really nice. Nothing to be afraid of, nothing to panic about. And if we want to jump over to the SPY chart, we have kind of a similar looking pattern. It's not quite as nice looking in my opinion. Price is actually underneath our EMA lines here instead of above it like on the Qs. So non-tech stocks aren't looking quite as great, but right now we are holding over huge support lines. This level here, this 587 level, 586, really in between 585 and 587 has been a pretty big support and resistance level for the past several weeks, and over to the past when we had all-time highs, we kind of broke over this level down here at the 584, just jumped over it. So for now, the overall market seems to just be in a very standard sideways correction type of a pattern here before more upside potentially. The pennant or falling wedge pattern that's potentially forming here on SPY is a nice looking pattern that we like to see. We've had a interesting hammer candle today, which is typically a bullish candle that you want to see, and often we've talked about this in one of our other videos. When we see a candle in this hammer shape, which is usually a bullish sign, we often see that price get knocked up in the upward direction here. So wouldn't surprise me to see SPY come up here and test this upper trend line again. And it could follow what we're talking about with Qs, hit the trend line, break and close over it, and we could be off to the races with all-time highs again. We are cautiously optimistic for now, but just overall market is not giving us any signs that we are in a recession or a correction or a bear market of any kind. For me personally, if I was going to be worried that we are actually in a bear market and things are moving in the wrong direction, I would personally have to see a weekly close below this 568 level, which is really kind of the last time we formed a higher low. Right now we are in the process of forming a higher low. And if this is the higher low here, which is all I mean is, so you can see this low point of the price where we're moving up, a little bit down, moving up, down, up, down, up, down. So these low points here, whenever the stock market has a correction and it goes down and then it goes back up, as long as the correction down does not go below the previous level, we are still in an overall upward trend. So you can see we had a low point here, but then the next low point was still higher than the previous one. Same thing up here. Low point higher than the previous one. Same thing. Low point higher than the previous one. And right now, this low point is higher than the previous one. as long as we stay above this 568 level, 569, we are looking fine. We could easily just chop sideways, go up, down, up, down, up, down within a $10, $15 range here. Would not shock me in the slightest, actually, to kind of see that take place. It's very normal, very healthy for a stock just in general to have that kind of a pattern playing out. So again, for now, I'm not exactly worried about the overall market or SPY, but any investments or swing trades that I'm looking at making, they are going to be in the tech stocks more than other stocks that might be heavy in SPY. So real quick, let's just do a jump over to Roku here, because we made a video about Roku and a potential swing trade that you could make, and it turned out to work out quite nicely for us. We pointed out on the weekly time frame, I'll zoom out just for a second, how we had a big downward trend line that had been going on for weeks, months and months actually, and it finally broke. And then it came down and retested, which is a really good thing that we like to see, formed a hammer candle on the weekly chart and then knocked it up. And usually we see these prices go upwards. And we marked off these lines for potential price targets to look at in the more short term. And we entered a position on Monday, bought some common shares, and we got to see the benefit of the stock gap up and run up to this 84.50 mark where we sold our position. And then the stock sold off just like the entire market. But it came back down and actually retested this falling wedge pattern here perfectly. And then today, while the rest of the market was selling, Roku was gaining. And I still think this is a very, very good looking swing trade to make on the weekly chart here. That is just a nice looking candle, and we've only got one more day left since tomorrow the market is closed, so one more day on Friday for us to get over this 84 level. And if we do, I fully expect 87 and then up to 89 or 90 kind of as a minimum in the short term, but long term this stock has lots of potential to go up to closer to the 120 mark in my opinion. So looking if you wanted to do a swing trade, and I may actually re-enter a position here if we get a daily close over this 84 level. So let's jump over to NVIDIA and see what's going on here. So you can see, there was a lot of hype around NVIDIA and the big technology event that took place earlier this week, and NVIDIA actually ran up and hit all-time highs in pre-market, and then we saw a very, very normal, classic sell the news event take place where it hit the top of this trend line and just sold off, huge sell-off. And we actually talked about this in one of our previous videos, that this might actually happen and what we were going to be looking at if it did. And we ended up buying around the 145 mark when this gap got filled, and then ended up buying a few more when it kept going lower. So we've got a pretty nice position in NVIDIA here, and overall things are still looking fine. We came down, tested this lower trend line. It's bouncing off of all of our EMA lines like we've talked about before. And I've got these different levels drawn out here that are pretty big support and resistance levels that you can see at the 139.75, the 142, 145 levels. So for right now, things are looking fine for NVIDIA. I fully expect NVIDIA to go with the rest of the market if Qs sees a bounce here and run back up to see the top of this trend line again. Now, I am a little bit cautiously optimistic with NVIDIA right now, because this white trend line here and this white trend line here are actually forming a rising wedge pattern, and that is a bearish pattern. We don't want to see that. It is not a good one to see. Usually these patterns break to the downside, and what I fully expect to happen at some point within the next, I don't know, first quarter of the end of the first quarter of 2025, maybe sooner. But at some point, within the next couple of months, less than 6 months, I believe it'll happen, in less than 6 months' time. Can't predict the future, but this trend line here that you see coming down, we never got a retest of it. And we typically want to see a retest of these bigger trend lines when a stock breaks over them. I fully expect it to happen. And it would line up pretty perfectly with the price falling out of this wedge pattern here. If we get a bounce up here, price is sitting up at all-time highs, and then comes down and this wedge breaks, it would come down and fall pretty quickly all the way down and probably test this trend line at some point down here. And looking at it just kind of how it's playing out, you can see the dates down at the bottom. Maybe April, March, we see this situation take place. But for now, in the more immediate short term, I expect one last bounce, one last little hurrah here to run up to the top of the trend line before the wedge actually breaks. So let's go over to one of our other plays and swings that we've talked about. AVGO, or Broadcom, had this nice bullish pennant forming here, but it has broken to the downside. Not ideal, but not completely a broken or dead play yet. We have another trend line here, this orange line that is going to be acting as a nice support for us, and it very likely could still kind of hover here for a minute and then swing back up and break back over this downtrend line. These patterns do that quite often. They give you a fake out, chase some people's stop losses, and get people to shake out retail out of these plays before they bounce back up. So as long as the price does not close underneath this orange line on the daily time frame, then I will be staying in my position on AVGO. If we get a daily candle close below this orange line, I will probably be cutting my position to preserve capital, and then waiting to see what happens afterwards. There's a chance that this big gap ends up getting filled if it loses its bullish kind of momentum that's been going on here recently. So we'll see. We're still in our position right now, and definitely eyes on every day to see what might take place later on. Let's take a look at Microsoft here, one of our favorite plays for 2025. On the weekly chart, we made a video last week talking about this diamond pattern, the breakout and the retest that we got with this awesome hammer candle on the weekly, and how we said that it was just going to knock this price in the upward direction. And so far, that's what it's doing. On the daily chart, Microsoft has been going through exactly what the rest of the market has been doing, but it's actually been holding up quite well. Our trend lines and support lines are holding nicely. On the daily time frame, we are underneath our EMAs, which we've talked about, not the best, but on the weekly time frame, we are still looking fine over our longer term EMA lines. So for now, I'm still in my full position here. Fully expect this stock to go to the 650, 700 price range by the end of this year. I will not be selling this stock probably ever. Even if we see like a big correction and overall change in the market, I just don't know if I would ever sell my Microsoft. I would just probably continue to purchase, because there's a chance that it drops all the way down to the 345 level. It would not surprise me if we see a recession, but I would just continue adding shares at that point. I wouldn't sell my position and collect the dividend along the way. But But yeah, just in general, Microsoft still looking fine. I actually think it's looking great and holding up well with the rest of the tech stocks right now. A lot of the price action is just really, it's the market makers and Wall Street, the bad guys we'll call them, making things look worse than they are to cause you to panic and to cause you to sell your shares at a cheaper price so that they can buy them before the price runs up again. That's my personal opinion, though. Not financial advice. Let's hop over and take a look at Tesla here. We are seeing some nice things out of Tesla. One of our big trend lines here, it is bouncing and holding off nicely. And then we have another trend line here. So we're forming a nice big pennant where I fully expect Tesla to come back up, touch this trend line, break it, and then doing what Tesla does, it's probably just going to launch off to new all-time highs. It rarely gives us the break and retest of these downward trend lines like we want them. But right now, it is holding and finding support at this 391, 392 level, which is the golden Fibonacci pocket zone that I'll probably do a video later talking more specifically about that. But the long short version of what a golden pocket for a Fibonacci zone is, basically that's when the algorithms and the quote-unquote smart money has orders to buy a bunch, so it acts as a good support level, and we often see price bounce off of it, which it did here, and then it's coming back down to test it again. It will probably bounce again back to the 400s, 415, wouldn't surprise me. And if we break, it's off to the races again. Tesla is a train that does not stop once it gets going. So we have a small position in Tesla right now, and if we get lucky enough to hover around this 390 or a little bit of a dip below that Friday or next week, we will try to add to our position. But if we don't, that's okay. We have a small one, and we will ride the wave as it comes. Let's where are we at time-wise? Yeah, we're doing good. Let's go over Square, one final stock here, which we talked about in one of our other videos, how this head and shoulders pattern was forming and playing out, and it's pretty much doing exactly that. We drew these lines when the stock was right here, and talked about how if the stock did not continue to rise past this daily close, that the high of 93.83, then we were probably looking at a head and shoulders pattern, and it was going to be going back down to this yellow line. And sure enough, we are well on our way. Now, it's acting as a support right here on our EMAs. And this could be a local bottom. You can kind of see how it is forming another, we got a inverse, the exact opposite of the head and shoulders pattern forming right afterwards. So there's a very good chance that this is the local bottom here for Square, and it chops around or makes a run back up to the 93 level. But wouldn't surprise me in the slightest if it actually continues down, comes back down, touches this trend line here at the 83, 81, anywhere between that range before bouncing back up. If we take a look at the weekly chart, this long trend line from way back here in 2022 comes all the way down here. We broke over it. We haven't really retested it. Some people would argue that this candle was the breakout and this candle was the retest. Very valid argument. I personally think that it's going to come back down and touch it again before it actually takes off to the races. So that is our market recap for you for the whole market. Tech is still looking fine. I think that we are going to see another rally before the actual big correction and recession. That is going to be coming soon at some point, especially when you have big stocks like Nvidia forming these higher time frame bearish patterns. So we'll see. Nvidia could easily break over this rising wedge and go to all-time highs. It's done that kind of thing in the past, fakes people out, forming these bearish patterns and then launches. So we'll see what happens. For now, I am holding all of my positions and swings, fully expecting us to rally and see higher prices in the coming weeks. So if you've made it this far, you're awesome. I appreciate you sticking around to watch the entire video. And if you didn't already, hit that subscribe button, leave me a comment, let me know what you think, hit that like button, share this with anybody that maybe they were freaking out about the stock market and they were worried about things. And you can share the video, let them know that things aren't as gloomy as they might seem. And yeah, hopefully this was helpful and beneficial. And remember, none of this is financial advice. It's all my opinions and my own personal thoughts and journals for myself on how I am reacting and playing the stock market. So hope you enjoyed and be on the lookout for the next video in a couple of days. Talk to y'all soon.